The ECB meets this week and expectations are very high that we are going to see some aggressive stimulus from the European Central Bank. An interest rate cut of 10 basis points is fully priced in. That would take the deposit rate down to minus 0.5%, deep in negative territory, although there is scope that they could even cut a little bit more aggressively back to 0.6%. But that measure alone will not be enough to satisfy markets. Traders are pricing in more aggressive policy again. That includes the resumption of a quantitative easing programme touted at around 30 billion euros a month, and also tiered deposit rates. So this is something designed to try and ease some of the stress on the banks as a result of those negative interest rates. In terms of where we stand with the euro as a result, what it means is with so much heavily priced in to the markets at this moment in time, the market is potentially positioned for a little bit of disappointment. We've clearly seen a lot of euro weakness now for some time. In this particular chart, the euro versus the Japanese yen, that has resulted in a one-way trade for much of the last few months, due to the fact that we've not only seen euro weakness ahead of this ECB event, but also the fact that we have seen a lot of risk aversion in the markets, and risk aversion typically is supportive for the Japanese yen. In terms of where we stand on this chart right here, we're now in the middle of a little bit of a range between around 116 and 120. 120 to the upside coincides nicely as well with that Ichimoku cloud. So if we do see ourselves propelled above here, in the event, for example, that we see some disappointment from the ECB on Thursday, then that would take us through a previous support and resistance level and the Ichimoku cloud, and would put us back into bullish territory. So that's something that we could potentially see now over the next 24 to 48 hours. To the downside, that 116 area still remains key. That's the most recent area of support that we've seen a bounce off of in recent days, following the low that was made here, which has coincided very nicely with the fact that we have seen that little bit of risk appetite returning in the markets, US equity markets, for example, pushing now to all-time highs. But ultimately, when we're looking at this pair here, I do think the ECB meeting on Thursday is going to be extremely key. Expectations are very aggressive. It's going to be difficult for the ECB to live up to these, and if they do, then that could lend to a little bit more weakness now in the single currency. We also have to remember that Mario Draghi's term as ECB president does end at the end of October. He will be replaced by Christine Lagarde, or he's expected to be replaced by Christine Lagarde, former head of the IMF. I wonder whether this is going to have any influence over whether the ECB does adopt this aggressive policy or just settle on an interest rate cut for now in order to try and appease the markets. Obviously, Mario Draghi unleashing the bazooka at his penultimate meeting could be a little bit controversial if Christine Lagarde does have other plans for the central bank. She's seen as being a continuity of the Mario Draghi regime, but only time will tell whether that's the case, and they may decide to save some of these measures for one of her first meetings in charge, so she can lay the path for how the ECB is going to look in the years ahead.